Sup guys, Christos here, and in today's video I'm going to be sharing the two stocks that I bought into this week. These are going to be stocks in a company where I in fact already own shares in, so it's not going to be a brand new company. However, the two different stocks that I have purchased this week, I personally think the company's stock price has been completely oversold, so I have decided to average in and get my cost bases down. So what I'm going to do is not waste any more time. All I ask from you guys is to drop a like on this video and let's get straight into it. Okay, so the first stock that I bought this week was of course going to be DraftKings. Now, this is a stock that I in fact actually purchased around 45 minutes ago at the time of recording this video, and this stock has been absolutely crushed over the past month. As you can see, we started off around a month ago, in fact around about the time where I made a video saying I was going all in on DraftKings at around $49.71, and since then we have dropped $10 in the stock price, which is an insane amount. It's about 25% of the stock price has just been wiped off in the past month. Yes, I have been getting some comments on my videos taking the mick out of me, saying great timing and all of that. That doesn't change anything to me, guys, but at the end of the day, this stock price has been absolutely crushed, and for what I think is absolutely no reason for it to be crushed. There are a couple of things that may have happened which could have caused this, but basically what I've managed to do is to actually get in this stock under $40 now. I invested around $500. As you can see, I picked up 17 shares of this stock today, and that's going to get my cost basis down a little bit. I think I'm going to be sitting at around $45 in terms of my average buying price of this stock right now, and yeah, I had to go in and buy this stock. If we actually just take a look here, when I made my video, I actually bought my initial investment of 12 stocks at $48. Now, this is so important. I actually released a video yesterday talking about dollar cost averaging, and I had the capital to go all in on this stock. And I know that the video said going all in on DraftKings, and I very much plan to do that over the course of the year. But one thing that I always do is I never go all in on day one. As you can see, I put a little bit in this day. I then went and invested another £500 a couple days later, £500 literally 2 days after that, and now I am going ahead and investing another £500 where I think this stock has now found the floor. But yeah, it's a really good reason to dollar cost average. Never put all of your eggs in one basket on day one. Even if you do plan to go all in on a company, always spread that cost over a certain period of time in case things like this exactly happen. Now, just taking a look here at a couple of the reasons why I think the stock price has actually gone down. We did have earnings come out, and they were mixed earnings. We had really good revenue growth, but one thing that I think the investors really didn't take too kindly to was the wider than expected quarterly loss and revenue miss. And as you can see here, DraftKings, the online sports betting company, fell Friday, this is last week that is, after reporting a third quarter loss wider than analyst expectations. They posted a quarterly loss of $1.35 a share on revenue of $235 million, and I think their company loss was at around $500 million for the last quarter, which is quite a lot, I have to admit. But one thing that DraftKings is doing is spending so much money on their marketing right now because all of the different states are being opened up for gambling in America. DraftKings do need to make sure that they take a majority of that market share, and for that reason I am absolutely happy with that. Now, a really good piece of news that has actually came out in the past week or so is that New York has now opened, or at least been approved, for legalization of gambling, and DraftKings is up there with the other 9 betting companies approved to allow gambling in this state. And as you can see here, DraftKings and FanDuel among 9 approved betting operators in New York. Here's the piece that I highlighted, which I thought was quite interesting. So the New York State Gaming Commission has approved 10-year sportsbook licenses for 9 online and casino betting operators who applied via groups of companies. The application by the Canby Group saw Rush Street Interactive, Caesar Sportsbook, Wynn Interactive, Resorts World owner Genting, and PointsBet awarded licenses. FanDuel led the other successful applications, which also saw the state give its approval for Bally's, BetMGM, and of course DraftKings to operate in mobile sports betting platforms in New York. Now, this is really good because, number one, it's actually good to be approved in the first place because, as you can see down below, Fanatics, Penn National, which is obviously considered a competitor of DraftKings, were actually denied by the New York kind of government to be allowed to have betting licenses in this state. And that's going to take a massive hit because New York isn't no joke of a state. It's a big state and there's a lot of people living there, and there's going to be a lot of betting going on. And as you can see right here, it says it's expected that sports betting platforms will go live during Q1 of 2022. But what I found really interesting was that in September, obviously we've got New Jersey that's legal right now. It became the first US state to draw more than $1 billion in revenue in a single month, and the state has seen revenue of $7 billion over the first 9 months of 2021. However, New York State Senator Joseph Adabo, hope I said that right, has said that once we enter the arena, we are going to eclipse New Jersey. So when we take a look at it, New Jersey has been an amazing acquisition for DraftKings and an amazing addition to their revenue. And the fact that we have confidence that New York is going to absolutely eclipse that, because I think it will, of course, anyway, that's really good news for DraftKings as well. So that's the first investment I've made this week. DraftKings, I invested roughly £500, which has gained me around 17 more shares of the company. And I actually made that investment around 45 minutes ago at the time of recording this video. Moving on to investment number 2, and this one is going to be no surprise to anybody, and that is going to be Disney. Now, I will have to admit, Disney stock has been absolutely crushed in the past kind of week or so, and probably for more of the right reasons rather than DraftKings, and that is because of the absolutely awful earnings miss that went on last week, and we're going to get into that in a second. But as you can see, the stock price went from around $175 all the way down to $160 in one day. The stock price dropped roughly 10% in one trading day, which was the day after their earnings. And like I mentioned, it was probably deserved. We missed on all 3 different targets that were set from this company. But like I say, I'll get into that in a second. Just talking about the investment that I made, as you can see, on the 11th of November. Now, I didn't get it at the cheapest price, as you can see. I did want to wait a couple of days for all of this to cool off, but I managed to get it in at $162.19. And I managed to buy 4 shares, which roughly came at around another £500 as well. Once again, this is going to get my cost basis down a little bit more. I'm currently sat at a cost basis of around $170 right now, so I am quite down on this company at the moment, but it doesn't matter. It's Disney. We are going to be here for a long time with Disney, and like I said, I have absolutely no worries. Now, just going back to the earnings, of course it was disappointing that we missed on all 3 different categories. We missed on revenue, we missed on earnings per share, and of course we missed on the main thing that I was interested in, which was the Disney Plus subscriber estimates, which was very much driving the stock price over the past couple of years. But realistically, am I too worried about this? This is Disney we are talking about overall. This is one of the biggest companies and one of the most in-demand products, that if you think about it, in terms of travel and leisure. And realistically, this company isn't going to be going anywhere anytime soon. So the main thing that I wanted to listen to was, what are the plans going forward? Why has this happened? And I think it was pretty much obvious reasons. So number 1, in terms of the Disney Plus subscriber growth, the thing that we needed to happen was we needed to produce more content on the platform. I can tell you right now, as a Disney Plus subscriber myself, it was lacking content, or it still is lacking content on the platform. And the fact that the CEO, Bob Chapek, came out and said 2021 has been a difficult year, even 2020 has been a difficult year with the virus in terms of getting their production out and the delays in their production, they haven't been able to release new shows on the platform, which eventually is going to bring in more subscribers. And if we just scroll down right here, one thing that was really interesting was that he actually joined CNBC just after the earnings call, and what he actually said was that Q4 will be the first time in Disney Plus history that we plan to release original content throughout the quarter from Disney, Marvel, Star Wars, Pixar, and National Geographic in one quarter. This includes the highly anticipated titles of Miss Marvel and Pinocchio, and I think this is really good news for Disney going forward. I think that 2022 is going to be the year for Disney for many reasons, and with Disney Plus coming out with all of these starting in Q4, Christmas, and obviously at the start of New Year, this is going to be really good news. But the main thing why I think Disney is going to strive in 2022 is that the parks are open again. This is the main attraction. This is what made Disney big, apart from the movies, of course, but this is why I love going to Florida, let's say, to go to the Disney parks. This is what is going to be bringing in that money again. People are going to want to get to these parks. The ticket prices have gone higher. I don't think people are going to be paying too much attention to that. The virus, touch wood, is on its way out for good, hopefully. And like we all know, 2020 and 2021 has been an awful year for Disney as a whole, because a large part of their income relies on that tourist attraction. And with America being shut to pretty much the rest of the world for, I think it was 600 days or so, it's obviously going to have a massive effect on Disney. And now the fact that the borders are open so the UK can go over to America as well and go to those parks, which bring in so much revenue that we seem to forget about, I think it's going to make a massive difference for Disney stock going forward in 2022, which is why I have decided to invest whilst this stock is currently down. However, having said all of that, there has been one more announcement that has come to my attention, and I think this one affects me personally more than most, that has really got me excited about this stock, and that is Disney actually announced that they are going to become a Metaverse platform. So this is absolutely massive for me. We have all been hearing every single day about the Metaverse. Obviously, Facebook, or the company Meta, started the trend, I guess, and companies have been coming out saying that they plan to go into this new Web.3 world that is coming out. And the fact that Disney is going to go into this world is really big for me as an investor. I can see right now all of the different things that they can offer. I was even thinking maybe they could offer a Metaverse kind of solution where you can potentially travel through their parks in a virtual reality sense. There's so much they can do, and I think they're going to actually use Disney Plus to actually host the platform, and it's going to be its own standalone platform. It's not going to join any of the other Metaverse platforms or anything like that, and I think this is going to be massive. And the fact that they are recognizing the way that technology is going, the way that the world is going, and they are adapting and innovating towards these times as well, means so much for me as a growth investor. So this one was absolutely massive, and another reason why I'm still really bullish on Disney going forward. So that was the second stock that I invested into this week, was Disney, and obviously I'm still very bullish on this company. And of course, let's see how 2022 pans out for them. But they are the two stocks that I bought this week. I spent around £1,000 on different stocks, £500 on DraftKings, £500 on Disney. I hope you enjoyed this video. Let me know down below if you invested into any of these two stocks this week, or maybe some other companies that you have put your money into. Other than that, I will catch you guys in the next video. Take care, and I'll see you soon.